2026 is going to be the best year to get into real estate investing, but only if you're investing in the right place. While everyone's fighting over expensive coastal markets, the real money is being made in the Midwest. I've been investing in real estate for over 11 years, and I can tell you the perfect storm is brewing. This isn't an opinion. This is based on the hard data that I've been studying for years. It's based on economic trends that many investors are frankly just missing. So let me break down the main reasons the Midwest is about to explode in 2026. Reason number one, interest rates are finally dropping. Let's start with the biggest game changer, interest rates. The Federal Reserve is cutting rates significantly through the end of 2025 and throughout 2026. The federal funds rate is currently 4 to 4.25 and projected to drop substantially by the end of 2026. While rates have been hanging around 7 and 8%, they are now down in the 6s and projected to go down into the 5s. And who knows, maybe lower. We'll see what happens. Now, 6% may not sound amazing compared to the 3% rates we had a few short years ago. But what most people miss is it's not about the rate only, it's about the direction that it's headed. When rates are falling, it creates massive opportunities and more buyers coming into the marketplace. Sellers who've been waiting on the sidelines will start listing their properties again, and buyers who've been priced out will start coming back to the market. This creates the perfect environment for investors who know how to move fast. Reason number two, the Midwest population growth. The Midwest is experiencing consistent population growth for the first time in decades. States like North Dakota and Nebraska and Minnesota are posting population increases in 2024 and 2025. In fact, Minnesota's population reached 5.75 million, actually a little more than that in 2025. And North Dakota added 6,000 people from 2023 to 2024. Cities like Indianapolis and Louisville and Kansas City are becoming real estate stars in 2025. This isn't a temporary blip. This is a fundamental shift heading into 2026. But why is this happening? It's for three main reasons. One, job growth. Two, affordable housing. And three, remote work. People can now work remotely for coastal companies or anywhere while living in affordable Midwest markets. More people moving in means more demand for housing, and more demand with limited supply means rising rents and rising property values. That's where you get to win. Plus, with the BOFSLO method, we buy with low interest rates anyway. Reason number three, job and economic growth. The Midwest isn't just gaining population, it's gaining high-paying jobs. The region is diversifying beyond traditional manufacturing into technology and healthcare and financial services. Cities like Columbus, Ohio, and Minneapolis are becoming tech hubs. Chicago remains a financial powerhouse, and Detroit is reinventing itself as an innovation center. The economic diversification creates stable, long-term demand for rental properties when people have good jobs. When they have good jobs, they need places to live. Now, reason number four, housing supply is still constrained. Now here's where investors like you and me come in. While demand is increasing, housing supply is still constrained. The Midwest housing inventory remains tighter than the South and the West, where supply has increased significantly. There's still a shortage of affordable homes under $260,000. And that's where the majority of our deals come in. Middle income buyers are priced out of most properties. The supply and demand imbalance is driving strong price growth. Cleveland, for example, is leading the nation with around 10 to 12% year-over-year price appreciation. Detroit is seeing a growth from about 3 to 7%. As an investor, you want to be in markets where demand exceeds supply. That's exactly what's happening here in the Midwest. Reason number five, political climate. The current political climate favors real estate investors. The government is making it easier for us as real estate investors moving into 2026. Congress just passed a new housing law with full support from both parties. This is the biggest change to housing rules since 2008. The new law cuts lots of red tape, making it faster to get permits, and gives about $200 million a year to cities that build more housing. It also gives tax breaks to investors. Now, what does this mean for you as an investor? It means less paperwork, faster approvals, and more money-saving opportunities when you invest in real estate. Now for reason number six, the Midwest cash flow advantage. Now here's why the Midwest specifically is where the explosion will happen. Three words, cash flow potential. While coastal markets are still overpriced, Midwest properties offer real cash flow opportunities. You can buy a property for often $100,000 that rents for $1,200 a month. Trying to find cash flow ratio like that in California or New York is simply non-existent. The Midwest also offers stability. These markets don't have the wild price swings that the coastal cities have. They provide steady and predictable returns. Plus, the cost of living is lower, so your investment dollars go even further. You can build a diversified portfolio in the Midwest for a fraction of what it costs in, say, California. Why this perfect storm is happening now. Here's why 2026 is when the Midwest explodes. All the reasons I've given you right now, they're all converging at the same time. Interest rates are falling. That will bring more buyers and sellers to the market. Population growth will increase demand. Job growth will create stable tenants. Supply constraints will support prices, and favorable federal policies will make it easier to invest. Now, this combination hasn't existed since like 2010, 2012, right after the last recession. The investors who recognized that opportunity made fortunes. But here's the thing, this Midwest explosion won't wait for everyone to catch on. Smart money is already moving to these markets. The investors who position themselves now, before the explosion becomes obvious to everyone, have the best opportunities and the lowest competition. If you want to take advantage of the Midwest explosion before it happened, you need to start now. I'm hosting a free training next week specifically about investing in Midwest markets in 2026. I'll show you exactly which Midwest cities offer the best opportunities, how to analyze deals in the markets, and my proven strategies for building cash flowing portfolios. Click the link in the description to save your spot. This training is completely free, but spaces are limited. And remember, the best time to invest was 10 years ago. The second best time to invest, right now, before the explosion. Everyone else will then see it and it'll be too late. I'll see you in the next video.